We want to see what happens here, but with the deadlock in the Strait of Hormuz approaching its third full month of disruption, where do the reverberations in the global energy markets go from here? Joining me now, S&P Global Vice Chair Dan Yergin. Great to have you, Dan. Why do you think the gasoline tax holiday news isn't bringing down RBOB or the wholesale price? Is it because we're waiting on Congress?
Well, I think obviously it has to go through Congress to get there, and there are a lot of other forces, as you've just been describing, acting on gasoline and oil prices in general. I think we're going to see actually, on a more global basis, the impact of the shortage. Over 1 billion barrels of oil have been lost since this, just in the month of March, and now into April. So there's and it's been made up with inventories. But basically, it looks like if the strait remains closed, we're going to see a more difficult oil situation heading into driving season.
The gasoline tax is used for road improvement and a whole bunch of other things that are really important for safety. What do you think the odds are that that might be suspended?
Well, I can't predict how the Congress is going to do it, but I think that probably almost every person in Congress, hearing from their constituents, would say they want to be on record of helping to lower gasoline prices, and that's the only way to do it quickly.
You had posted on X back on March 8th, which seems so long ago, that the global oil and gasoline system is more resilient and diversified than it has been in decades. Then in April, you posted the, quote, nightmare scenario for oil markets, and that, of course, is the Strait of Hormuz disruption.
Liz, let me say, both of these are true. I mean, it's resilient. When we had these oil crises in earlier decades, the U.S. was the world's largest importer of oil. Now we're the largest producer, the largest exporter of LNG. So that part is new. And you have oil being developed off Brazil, Canada, Guyana. But the other side of it is it's always been a nightmare scenario for decades of the Strait of Hormuz being shut, and yet people somehow thought it would never happen, but here it's happened.
Yeah, and I can understand President Trump saying that this offer that the Iranians came back with is, what did he call it, a piece of garbage. They want war reparations. They want to stop the Israeli attacks on Hezbollah, which they fund, terrorist organization with the Iranians fund, but also full sovereignty. You just talked about something new, full sovereignty over the Strait of Hormuz. It's an international waterway.
Exactly, Liz. This is a dangerous precedent in itself for other places in the world that you can shut things down too. But it's absolutely unacceptable to the Gulf Arabs and I think to the world community to have Iran deciding that the Strait of Hormuz, as you say, is an international waterway, should instead be an Iranian canal that they collect tolls on and use that money to fund their military.
We have an investor audience here, and of course, as oil stays high, if they own energy stocks, would like those to remain high. It's really a conundrum, I'm sure, for people because they have to fill their tanks. But that said, as we look at some of what's going on here, the drillers, the rest of the energy sector, it's an interesting moment that we see. I mean, big oil obviously moving higher. ExxonMobil up 3.25% right now. So it's good for certain stocks. But what happens if this situation, if this conflict ends? Do those just go crashing? We still need fossil fuels.
Well, I think our view is that even if the Strait of Hormuz miraculously opened up tomorrow, it would still take 7 or 8 months to get it unsnarled, and that we would still see oil prices elevated. Remember, Liz, at the beginning of the year, it was like $60, $62 a barrel. Now, as you point out, it's $104 a barrel. And at the beginning of the year is what do you do about all this surplus? Now, we're going to have a period of shortage. And if you go to other parts of the world, like Asia, factories are shutting down. People are being put out of work. They're rationing gasoline because they're so short of supplies. So we just aren't feeling it as strongly in the United States for the reason that you alluded to before, because the U.S. is in a very strong position energy-wise that we were not in decades ago.
Daniel Yergin, good to see you. Thank you very much.